Hey everybody, Matt and Nicole here from 1000 CPA. Thought we'd get together and chat about this new tax law.
Figured you guys have been getting enough emails from everyone with the subject line of COVID-19 that maybe we take a different approach and go over some of our newsletter just on video, answer some questions that we've already gotten just from last night to today, especially with that bill officially passing the House, I think as of what, an hour ago?
At most, yeah.
So I think our game plan is just to go through the newsletter. That being said, if you didn't get our newsletter and you're not getting them, please reach out to Matt or myself. Keely is also a great one, just Keely, Keely, at 1000cpaservices.com. And she'll make sure you get added to the list. And we've also been making sure that you got any videos that we've done in the past as well. So, I mean, I'm thinking we just run through
Yeah, we've been in
newsletter.
touch with some SBA lenders, kind of getting their feedback, healthcare professionals, some HR professionals. So we've been reaching out to all of our resources, kind of pulled all together, and we're all kind of trying to figure it out as we go along.
So I think probably a good place to start is, just like I said, we just want to go through the newsletter we sent. We thought we'd try to keep it short, and I think by the end of it, it was 5 pages long, which is a lot to read. This video is really targeted towards our small business clients, so we're gonna hit home mostly with those loan questions, SBA questions. Obviously, not everything in the bill that's covered, so we'll go ahead and start off with just maybe the stimulus payments.
Yeah, so stimulus payments, everybody is going to get roughly $1,200 a person if you're over the age of 18. If your income's over $75,000, it's going to start to phase out. If you're making $99,000 or more a year, you're not going to get anything from it. Married couples are going to get $500 for each kid that's under the age of 17, and we're going to go from there.
And we do realize that income can change from one year to the other. So maybe your 18 income was high, your 19 income is going to be lower. In the past, when these payments have come out, they've trued up. We don't know how. We don't know if that's going to be when we file a tax return. So we are getting information to you as soon as it gets to us.
They're talking about direct depositing these into your accounts. That information they're going to have from Social Security payments you're getting or direct deposit from tax returns and things like that. If they don't have that information on file, they're going to mail us some paper checks and then they'll send up some follow-up notices if they couldn't find you.
But the one thing that's for certain is they're not waiting on your 19 tax return to be filed to receive these stimulus checks. So while, obviously we prepare all of your individual returns as well, the stimulus check isn't based on when that return gets to them, which is good for all of us.
Which is not due until July 15th now.
Yes, that too. And I think that the state, and I believe I maybe saw the city.
The city has pushed it back as well, and
too.
Illinois finally came around and extended theirs too.
Yep. Student loan payments. So payments for student loans they're suspended without interest through September 30th of 2020. This does not apply to private student loans. I would tell you, not just on student loans, but any debt you have that you're suddenly wondering how you're going to pay, pick up the phone, call people. Everybody's in the same situation. I've seen more Ally Car, Ford Credit. In the bill that was just passed, it says a federal guaranteed mortgage. They actually have to allow you to defer some payments. So as you're trying to figure out cash flow, keep in mind, just pick up the phone and start calling. Look on websites. I think a lot of phones are overloaded. They're trying to put a lot of information online as well.
It doesn't hurt to take advantage of the situation and say, hey, look, my doors are closed. I'm out of business. My revenues are way down. What can we do? And we've seen people defer payments for several months. Some banks are just saying, hey, we'll do interest only, or we're going to accrue the interest for 6 months, and then you'll owe that at the end, and then we'll push the term out another 6 months at the back.
Unemployment benefits. So we're going to kind of cover this at a high level, and then I'm sure circle back to it. But unemployment benefits, obviously, in the new bill, they're increased for $600 a week. So the maximum Missouri unemployment benefit before this was $320. They've added $600 onto this a week, which means that if you're above maximum, if you're getting the $320, which when we did the math, it was
somebody at
50,000,
35 grand a year
okay.
was still getting the max of $320.
So
it's right around there where it starts to decrease a little bit.
So if you're around that 35,000 or up-ish, you're at $920 a week in unemployment benefits, which is substantially more than $320 per week. There are also rules on reduced pay. We haven't worked out the math, but if you have downsized hours, I know you want to talk a little bit about this.
Yeah, so essentially it's going to offset itself. So if somebody makes $500 a week and if they could have qualified for benefits of $300, but you're only paying them $150 a week because they're working less hours, they can file for unemployment, and unemployment's going to say, okay, well, your max benefits are $300 under our calculations. You're making $150. We're going to subsidize that additional $150 for your reduced time. And I do want to point out that $600, it's good for 4 months. So they're going to get roughly 16 weeks of this at the $400, that extra $600.
Yeah, and so after the 4 months, it's going to go back to that. As of now, it's going to go back to that $320 a week. So that's definitely a good point. They also expanded unemployment benefits to cover independent contractors and self-employed individuals. So I'm going to tell you, we don't have the detail on how this works. I haven't applied for unemployment yet. We've asked any clients that are to take screenshots, send us any information you can, because our goal is to share information at this point. And then if you're a worker that you're able to work from home, then I believe you're not eligible for unemployment benefits at that point. Again, there is a lot of good frequently asked questions on the Department of Labor website.
Along with a calculator of benefits too.
Yes.
And we don't know how that $600 is going to be calculated, implemented, or anything like that. It's purely a federal stimulation to the state unemployment benefits. So that's how they're going to work it out together.
So like we said, we're going to bounce around the letter and just kind of knock out some pretty quick that we can cover. So the retirement account withdrawal.
So you can pull out up to $100,000 out of a qualified retirement account. And typically you pay a 10% penalty if you're under the age of 59 and a half. And what they're doing is they're waiving the penalty, but they're also allowing you to pay any income tax burden from that withdrawal over a 3-year period. And there's also verbiage that allows you to repay the amount that you took out over the next several years. So the mechanics of how it all works, we're not 100% yet, but as we get more guidance, we'll definitely get this figured out and communicate it to you guys.
Required minimum distributions. Any required minimum distributions that you're required to take in 2020, they're waiving those. So that will be something that your financial advisor will reach out so that you potentially, you don't need to take that out if you don't need to take it out.
And these are for taxpayers that are ages 70 and a half and older. Is who this is applying, 72 for this new year.
Net operating losses, I don't know, I don't feel like we have a huge amount of clients that this applies to, but in the past, if you had a big loss year, you could carry it back. With tax reform that happened a couple years ago, those were only available to carry forward. They turned that switch back on, that now NOLs that originate in 18, 19, or 20 could be carried back 5 years. So, I mean, that is, some good news is that if we do have a 2020 that is not profitable, once those tax returns are filed, we can carry that loss back and recoup some of that income tax that you paid in earlier years. So I think at this point, we can probably kind of talk about the small business interruption loans. And before we get started, there's a little bit of confusion here. We're talking about two separate loan programs. One is the SBA disaster loan program, and one is the small business interruption loans. I've actually, I forgot to mention this to you earlier, Matt, but I've heard them, they've been covered by an acronym of PPP, I guess, payroll protection.
Yeah, or a 7A loan.
A 7A loan. Yeah. So there's a lot of terms, but the biggest thing is the disaster loans, the SBA disaster loans have really only been referred to as the SBA disaster loans. That is separate. Missouri is available. The SBA disaster loan is available on the website. They have completely changed that website. Now you download a form, fill it out, and upload it.
Yeah, so it's two major forms. It's an application, and it's another form that talks about once your gross receipts and your cost of sales. I just got off the phone with a woman preparing one, and she said that when she uploaded it, it asked her to upload a personal financial statement as well. So we're seeing that those are still being requested.
If you're doing this at home and you're trying to figure out how to upload things, just a side note here, is it requesting them to be uploaded into PDF, do you know?
I don't know.
So if it is, TurboScan is a great app that we use around the office and we tell our clients about all the time, where you can print a piece of paper, take a picture of it, and it'll turn it into PDF, email it to yourself through your home computer, and then upload it to a website. That's a little tip there. But that SBA loan is on the SBA website. That is completely separate from the loan that passed in the CARES Act that, like we said, just passed the House.
We just spoke with an SBA lender a couple hours ago before the law had passed, and he said that he had gotten off the phone with Small Business Administration on a conference call, and he was still recommending to apply for both loans if you're looking for some disaster relief through this SBA loan stuff.
And I think one of the confusing factors about that is that even in our newsletter we say that the applicant doesn't have any application pending under this program for the same purpose. again, we've talked to 2 separate SBA lenders, and they've said the same thing, which is get your application in under that. Because worst case, they're going to say, okay, here is your application, and you can say I want the money or I don't want the money. Just because you put the application in doesn't mean you're tied to that fund until they get to the disbursement part. And I also feel like they're having them work together, because even in what we read in the law, they're referencing each other.
Yeah, so even like combining the two. So if you have a disaster loan in place and you're going to get this 7A loan or this triple P loan, that you can roll the other one into this one, and then it can be part of the whole forgiveness spot on the backside.
Which we'll get to. And again, I mean, the biggest thing is we feel like, and the SBA lenders we feel like are talking about, if you're planning on doing a disaster loan, start the process. The bill's passed, so that's good news, because 2 hours ago that wasn't the case. If we get any other information, we will put it out as soon as we can to hold off on those applications. But everybody's in the same place, and people aren't waiting to apply for these things right now.
And I would say watch for our emails. Like you said, if you're not getting them, reach out and get on our list. Facebook is another good spot. I think we'll probably continue to try to push as many of these videos out and keep doing our email updates as well, just so we can, like she said, we're all learning this together. So any knowledge you guys share, we'll forward on, and we'll continue to learn and push information to you too.
As far as the SBA loans, as of this, what we know right now is that they're at a 3.75% rate. They are going to spread them, well, the longest they can be termed is 30 years. What I understand, and everybody else is telling me, is that they kind of determine your payment terms based on your liquidity, if you will, the guarantees that you can put for the loan. The maximum unguaranteed loan is $25,000. So that means you don't have to have any other asset they can tie to. Anything above 25, they're wanting, second, third, fourth place on a mortgage or anything else out there that they can get their hands on. As of right now, those loans were not forgivable. Now, when Matt and I were reading the actual bill last night, 7 o'clock, it said in there that there was verbiage that they actually think they're going to consider forgiving those as well, but that is not certain at this point.
And everything she's just referenced is the SBA disaster loan that you apply for online.
Yes. What else about the SBA disaster loan? I'm trying to think of anything else. There is there are forms underneath on the website that they'll ask for. A lot of those are your monthly cash flow. The good news is, if we are working with you doing your monthly accounting, which is the majority of who this video is going to go out to, we have access to a lot of that. So please don't try to figure this out on your own. Call us. That's what we're here for. We do the monthly financials. We can help you through that. I think we'll probably focus maybe one of these just on that once we get more detail of what route we want to take. If you get anything that says a loan number while you're applying, write it down. That's very important. That's what the SBA is processing off of. If you decide to call the SBA customer service, be ready to be on hold for 3 hours, because that's about what it takes to get through to them. I don't really know of anything else with the SBA loan. I think probably getting into, before everybody falls asleep, the small business interruption loans.
100%, yeah. And I think this is probably what a big focus is going to be for a lot of our small business clients. This is what we're going to use to get funds. So let's talk about what it funds and how they're calculating it, and the forgiveness stuff that everybody's talking about.
So small business interruption loans, one piece is that this is addressing people under 500 employees. We have somewhat of control of who sees this video. Obviously, I suppose you can share it with whoever. If you have more than 500 employees, because you have other locations, there's some language in there. There's for restaurants and hospitality, but we're going to assume that we're talking to people who are under 500 employees, I think, for the point of this video, just because we didn't really dig into a lot of that multiple
absolutely.
location. So again, the goal is that they're going to ask for your average total monthly payroll cost. So we've heard the bill is wrote 2.5 times your average total monthly payroll cost of a 1-year period. The SBA lenders we've talked to said they're supposed to take your total monthly cost and then multiply them times 4. So we're at a little bit of confusion over what it actually is, except Matt and I feel like at this point the bill, the way it was written, says 2.5 average total monthly payroll costs. That's what the maximum loan amount is going to be, and that measurement is different on whether if you haven't been in business and you're new, they kind of give you different terms to look at that rolling 12-month period.
And we've seen some interpretations that have referred to it as operating expenses. So they're actually going to include loan payments, utilities, rent, and that could go into the calculation as well. We're waiting for the guidance to come through, and everything that we've read is, guidance next week. But we also heard that we'd have a bill on Monday of this week, so who knows how all this is going to go.
So the borrower requirements to obtain this loan, there are very few. You have to continue to be in operation during the whole COVID-19 emergency, and the funds are going to be used to retain your workers and pay your mortgage, your lease, your utilities, your health insurance. The biggest thing is they're going to fund you the 2.5, we'll call it, times the payroll cost. Once that happens, did we read it was, I feel like it was like 4 months later, 4 or 5 months, they're going to come in and say, okay, what did you actually use this money for?
Yeah, in 6 months, you'll fill out a document to request loan forgiveness.
And the way they're going to determine loan forgiveness is they're going to say, okay, you took 2.5 of your payroll, and let's just say it was $150,000. Now we want you to prove to us that you used that $150,000 to pay costs that are within this bucket that we consider, the relevant costs: payroll, mortgage, lease. And again, there's going to be a very specific list of costs that qualify. If you in fact say, I spent that $150 for those things, then they're going to forgive that entire loan. Otherwise, if you say you only spent $100 because through all this you realized you didn't need all the staff that you had, or you downsized your rent, or whatever it was, they're going to say, okay, the $50,000 you didn't spend, we're now going to turn that into a term loan. And I feel like I read 4% somewhere.
So everything says 4% or under 4%. So I would expect that 4%, and I believe it's a 10-year term.
Kind of elaborating on the payroll costs. I don't know if you want to get into, what kind of some of.
So not only are you talking about gross wages, you're also talking about payroll taxes, healthcare, benefits. So there's other expenses that are getting rolled into this payroll cost. So it's almost like an employee cost is what you're looking at, and is what they're going to use as a measurement tool for probably the lending and the forgiveness as well.
And it does include commission-based pay. So if you're a business that your people aren't W-2 and they're commission-based, those are on there. There is a cap to the wages of $100,000. I'm assuming the way this is going to work is they're going to say, Dr. Z makes $175,000 a year. For this purpose of 2.5 times the average monthly cost, we're only allowing 100.
So they're going to say he makes $100,000 a year, which is going to be less than $10,000 a month. So now he's looking at a $25,000 allowance to borrow the money against.
Right, and that again, that definition we're going over is the payroll cost. What they're using to define the 2.5 times the average monthly total payroll costs.
And we read the law. I mean, it's a law. It's written by politicians and lawyers.
I feel like I have an email here. See if I can find it. But it was from a lender, and an SBA lender, and what she's saying to her clients is that actually this is a good point, is your local bank. What's being said is that, again, SBA disaster, we're going to kind of go back to that for a second. That is not funded through, if you have a local bank, if you're with Busey Bank, you're with US Bank, and US Bank has a banker that's what they focus on, is the SBA loans that US Bank services. That person is not going to do your disaster loan. They're a great resource because they're trying to keep up with it. Your disaster loan goes through the website. This loan, the CARES Act loan, is going to be serviced through your local SBA branch lender. I would highly recommend reaching out to that person. Get on their email list. I can tell you, one of the ones that we work with, she's saying, I'm taking care of my clients before I take care of anybody that's not my client. And that means, I don't know that every bank has an SBA lender. I know US Bank, Busey Bank, I can think of 2 more that do, but let's say for some reason your bank doesn't. What they're saying is, we're going to take care of our clients that were our clients, and then we'll take care of other ones. So if you have a bank that has an SBA lender, call them, reach out to them.
And what I recommend is I would call your banker today, and I would say, hey, we know this is coming down the pipe. We know this is going to happen. This is something I'm very interested in. I'm going to need in order to survive. What do I need to do? Can you do this? If you can't do this, can someone in your bank do this? And if they say no, say, who do I go to? And if they don't know, call us, and we will give you some names to go to.
And sorry, back to the disaster, we forgot to mention that those have a deferment of 11 to 12 months before the first payment's due. Mm-hmm. So if they're not forgiven, those loans aren't going to have a payment due for 12 months. So back to the in-house banker, the way this particular banker is doing it is she's setting up a file for all of her clients right now because she knows this is happening, and she's telling them, here's what I'm going to need from you. The list of the documents she's saying is, she's saying take your expenses and show us what your costs have been for the last 12 months, and they're going to take the average. Again, payroll costs, payroll taxes, benefits, lease payments, utilities, loan payments. I've heard retirement contributions to a certain extent are on there. If you're with us and we're doing your monthly or quarterly accounting, we have that information. If you're not and you need somebody to start compiling that information, reach out and we'll see what we can do. This is not going to be something that you're just going to be able to throw a number at them. They're going to want to see proof of all this, including, I read somewhere else, they're going to want to see the W-2s and what the costs have been. So you can't start changing people's salary because it's going to benefit you more to give that person $60,000 versus the $50,000 that she actually got. So obviously, probably goes without saying, it's going to have to be pretty factual. So as far as the
or factual. I don't think it's. You said pretty factual.
I think it should probably be very factual, not pretty factual. He's right. I'll give him that one. What else do we have on here? Well, the payroll tax credit.
Yeah, so there's a payroll tax credit. So they're going to give you 50% of a refundable tax credit. Is it on the wages paid during this period?
Up to $10,000 per person. So it's almost. I feel like it's almost if this. There was very little information on this because Matt and I were both looking at this going, well, what about this and this? And it sounds to me like wages of $10,000 during the crisis. During the crisis means we don't know what at this point, I suppose. So every employee you have that makes over $10,000, you're going to get a $5,000 credit if they make $10,000 during that period.
And then it's going to be offset by your future payroll tax payments. And then if there's additional, then they want to try to make it so you can get it reported and try to get that credit back to you as soon as possible. Mm-hmm. And there's a rule here on this one. Was it firms with 100 or less people?
Yeah. So if you're more than 100 people, then it has some additional. I don't know. We'll just say some additional rules. This is one that there was not a lot of information, so bear with us as we get more information on that one. I don't know, you want to talk about the payroll tax deferral or?
So they're talking about payroll taxes, the employer portion being deferred, and it'll be like half it's due by December 31st of 2021, and then the second half is due by December 31st of 2022.
So I think something would be useful here is to kind of, just a little brief lesson on what we're talking about in taxes here. So, you have somebody who makes $50,000 a year. Every time you pay them, they pay 7.65% in Social Security and Medicare, and you pay 7.65% in Social Security and Medicare. Their federal withholdings are theirs. The only deferral, the way we're understanding this to be, is the employer portion of the payroll tax. So that's 7.65%, which, again, this is to be determined for a lot of people, but the way it's read is it's a 7.65% of payroll taxes not having to pay it in. That's something I wouldn't jump to, only because I feel like you can get yourself in a world of hurt when you realize now I haven't paid payroll taxes for 2020, and now December 31st of 2021 is coming and I have 2 years worth paying.
Yeah, the way I'm looking at the new law is pretty much they're trying to make sure that people can still be compensated during this crazy time. And so whether it's through payroll tax credits or increased unemployment benefits or disaster relief loan based on operating expenses and payroll, they're trying to make sure that everybody's still getting a paycheck. So which option is the best and which should you do? We're trying to figure it out case by case, employer by employer, in different employers in different situations. But I think at the end of the day, they're really trying to make sure that all these people are still getting paid and that we can afford to still pay them to try to minimize the impact on the economy.
So, and I think a little bit what Matt's going into is the question that we have received, probably 7 times in the last hour, which is, should my people claim unemployment? Or should I do this loan? And which loan? We don't really think there's going to be necessarily a right answer. I think the question is, the way everything is written right now, by you keeping them on payroll, they are wanting to move on the CARES loan. We're going to call it the 7A CARES loan very fast. I just read something that they think they're going to have money to people by the end of next week. There's no way. But let's just say it's in 2 weeks. So bottom line is, the way we're looking at it is, your employees are going to be taken care of. Version 1 is out of your checking account, to which you're going to get reimbursed from the government to do that. Option B is they claim unemployment and they're getting the $920 a week. there's a couple thoughts of either of them. One is, goodwill. Employees would rather you be keeping them on payroll than them having to go file an unemployment claim. If that's the option and you're going to be made whole by these loans, then maybe that's okay. Option B is you don't have to mess with it. They're going to get $920 a month. If they make more than that, I guess then it becomes, if they do unemployment, they're not going to be made whole. Right. If you get this, if this loan works the way they're saying it and your payroll is pretty standard, they should be able to get what they've been being paid and not get any less of a check, right?
Yeah.
Again, B, unemployment, it's not anything you have to mess with. They have to go to unemployment. It's, as far as, I think one of the things to talk about is if their employees want to go claim unemployment, do they need to get something from the doctor saying you've been officially discharged, or do we have that information? Because it seems like there's a lot of mixed.
There's a lot out there. So anybody I've talked to that is going this route, I've just kind of said, communicate to your employees that they are officially laid off as of this date, or so that way they can go out there and apply for benefits. Mm-hmm. I've heard a lot that state unemployment is trying to fast track everybody. There's typically a 1 week waiting period for benefits, and a lot of states are waiving that. I've heard chatter that they're not going to negatively impact the employer's
I've heard that
rating.
a lot. That's a good point. That it's not going to count against you. Your unemployment rate is not going to go up as a result of that. I think I've read that at least 6 times.
But these are all things that we've read from other people. If you go on Missouri Division of Employment Security's website, it does not say that. Like we're not sitting here saying these are hard facts, but this is all the information that we're getting, and so we want to share it with you.
One of the conversations that we had about, should you have your people go claim unemployment? One of, I think, the concerns I have is, okay, so Susie goes and claims unemployment. She's making $920 a week. She was making $900 a week, so she's doing better. And now the crisis is over. You have all these people that want to come back in, and you go to hire her back, and she's like, I'm going to get this $600 for 4 months, and maybe I'll do early retirement. Maybe I don't want to work anymore. I don't know. Now, Susie can quit too at any time. So, but I'm saying, there is that now they're on unemployment. You have to hire them back, and they have to be wanting to come back as an employee, mm-hmm. right? If you submit your loan using your payroll costs, and then all of a sudden your payroll costs do decrease, going back to that explanation, you're going to have some of that loan to pay back unless you replace those people.
Absolutely. But the way I look at it is, if you're borrowing money to pay expenses, and if you pay the expenses, you get that loan forgiven. Well, if I don't pay the expenses, I have the cash left. So my unforgiven portion, I in theory would have those dollars that I could repay the loan, and I'm still walking away at zero.
Mm-hmm. As far as health insurance, that was the other part we talked about, because we were kind of going back and forth with each other, just saying, lay off. Do you do unemployment? Do you keep them on? And I didn't know about the health insurance part of it. Your employee now goes to collect unemployment, but her health insurance is with you. How does that work? We work with a health insurance company, Hill & Brand and Company, and they sent out, and this is also in the newsletter we sent out, it's on the last page, some information he's received about health insurance. And he says, and I'm going to read this just because it's not, my knowledge, I don't want to mess it up. If your company has layoffs, issuers are allowing all employees to stay on their plan even though they are not actively employed. If an employer cannot financially support the ongoing premium payments, the employees have standard COBRA rights to stay on the plan at their own cost. Furthermore, if they drop their coverage due to financial constraints, they will be able to rejoin the plan under a qualifying event without a standard waiting period. The only thing that jeopardizes this is if the employer entirely cancels their insurance plan. As long as one person stays on the plan to keep it active, the coverage will stay in force. Just to be clear, he was talking about medical insurance. He's saying as far as dental, life, disability, there is not a uniform reaction to this. He also says that all health insurance companies are waiving copays and out-of-pockets for COVID testing. You have to be experiencing symptoms or something that gives you reason to think you're being tested. If you're being tested as a preventative measure without symptoms, that will count towards your deductible. He also mentions that United Healthcare, and then I got an email from him today, Anthem, is doing a universal, as you know, there's open enrollment, and that's when you can allow people on your health insurance. But United Healthcare is allowing employees who previously waived participation in the health insurance plan to come aboard now until the end of the month. So if you have any uninsured full-time employees, this is a good chance for them to obtain coverage. So Anthem I'm pretty sure it was Anthem that he sent me an email is doing the same thing.
And I don't know if end of the month is referring March 31st coming up real quick, or if they're going to run this through April or
You know
not.
what? No, I actually, on the email he just sent, I know he put March 31st because I was
Gotcha.
thinking it was pretty fast.
So there's only a few days left on that.
Yep.
And I think maybe we'll do another video and talk about some of this paid sick leave requirements too.
Yes, because there's a whole, if you've heard about the you can pay them 67% and get reimbursed up to $200 a day. That's another way to keep your employees on. It just, that seems like, yeah, we can put that together another way. It seemed like, yeah. I guess just a couple more things to kind of conclude here. As far as the credit versus cash, Matt and I's message to everybody has been the same thing. Remember, you can't pay payroll with a credit card. So now's not the time if you're sitting on some cash to pay off that credit card balance because you don't want that on your books for these loan or whatever, because you can't get that money back. So, we want to make sure that you're holding on to the cash that you can.
Yeah, and I mean the biggest thing is, like you said, can't pay payroll with a credit card, even though apparently ADP might let you now.
I think I heard that.
It's a slippery slope. Yeah. But if it's between paying a line of credit down or paying off a credit card, pay down your line of credit first. And this is very unusual advice for us to give, because usually we're saying pay down the higher interest rate first. It's odd times. We have odd strategies, but it's a cash flow game now.
So I think that's all for now. Like I said, we just wanted to reach out. We're gonna probably still put together newsletters, but at the same time probably try to back them up with these, just because I think everybody's getting tired of reading stuff.
Yeah, we'll make the next one shorter, I promise.
Yes, we're here. We have employees working kind of all over the place. Matt and I are here. You have our contact information. Know we're here to help you guys make these decisions, and we're all in this together.
Thanks, guys.
Thanks.
Stay safe.